This video is part of the important takeaways that I want you to keep in mind as you go through this class. And this one has an interesting title. I'm calling it the blank value. And what I mean by that is that in our world, in accounting, there's a lot of items a lot of valuations that we do and that we describe. And as an accountant, you got to be very clear about this. And what makes it a little complicated sometimes, I think, is that in the business world, sometimes people will use this terminology in different contexts or in a slightly different definition than what we would do in accounting. So just out of the top of my head, I'm thinking of a few of these right here, some of these valuations. So we often talk about book value. We talk about carrying value, the net realizable value, fair market value. Sometimes we call something the basis of an asset, which is basically the book value of that asset. We also use the term historical cost value, which is the initial purchase price. The salvage value or residual value when we're dealing with property, plant, equipment, and how much we expect to be able to salvage out of it at the end. The depreciable value or the depreciable amount, and this in the context of depreciation is the amount that you can actually depreciate over the life. So normally this would be the historical cost minus the salvage value. You also have the face value. So when you're dealing with financial instruments, the financial instrument itself will have an amount on it, which may or may not be the fair market value or the worth of it. So sometimes what's stamped on a financial instrument is, and sometimes it isn't, what it's worth. And that's what the fair market value is. And in terms of time value of money, you have the future value and present value. In terms of inventory, you have the lower of cost or market or the lower of cost or NRV. And all these terms, and there's more out there, but all these terms, we have to be very careful in terms of how we use them. And more importantly, I think we have to be aware of how other people use them. So I'll give you a quick little example of what I mean by that. The book value, when we talk about book value, a lot of times we're dealing in the context of property, plant, and equipment. And in that context, book value is nothing more than the historical cost minus the accumulated depreciation in there. Okay? Now, some people will call this the basis. That's what they would call it. And we have to be aware that if they're using that terminology, we want to make sure that they are defining this as book value. And it's just a clarification issue. Sometimes people will freely call this the carrying value. You know, what we, by definition, call the book value, they'll call the carrying value. And there's nothing wrong with that. It's just that when you're in that environment, you have to make sure to clarify what people are referring to in terms of the carrying value with respect to property, plant, and equipment. So it's your task as an accountant to make sure that whoever you're conversing with, whoever you're explaining these details to, they understand the definitions of these acronyms here or these valuations. Okay, so while we in accounting think of book value as this by strict definition, other people will think of it as this, and that's not necessarily wrong. That's just it's just important for us to understand the way they're calling it. Carrying value, for example, in the context of notes, financial instruments. A lot of times the carrying value is defined as whatever the face value is. In other words, the original loan plus or minus any premium or discount. And as time passes, the carrying value changes because you amortize some of that premium or some of that discount. Okay? So we traditionally would call this the carrying value of that financial instrument. But again, check by definition what they're referring to. The other thing, another one here, like the net realizable value, this even in our world can have different definitions depending on the context. So for example, in the context of accounts receivable, the net realizable value is the accounts receivable gross amount minus any allowance for uncollectible accounts. But NRV, or net realizable value, also can be used in the context of inventory. Okay, and in that context, it is defined as the selling price, the regular selling price, minus any additional cost to complete it and dispose of it. So another way to look at it is it's kind of like the net selling price. So sometimes we will value inventory in such a way at the net realizable value. There are some rules with respect to inventory that you either lower it at you either value it at LCM or LCNRV, and that's where this definition of net realizable value kicks in differently under different contexts. So what I'm trying to say here with this quick little video is, it is your responsibility to start tracking all these blank values, whatever they may be, and for you to start noticing, okay, NRV means something in the context of accounts receivable, but NRV means something else in terms of inventory. And the same thing goes for all these other acronyms. And you have to be very careful. And when you converse with somebody about these things, make sure that both of you are on the same page in terms of what you're defining as blank value. And I gave you this particular discussion here, how we accountants call this definition book value, but some people really call it basis or carrying value. So if you're having a conversation with somebody regarding this, please clarify that, and then that way there's less confusion as to what it is that you're trying to describe.